This episode is powered by US Bank and recorded live at the University of Utah's FinTech Exchange. Live from the FinTech Exchange from the University of Utah in Salt Lake City, the FinTech Hot Take sponsored by US Bank. And I'm very excited about this one because when we think about the world of partner banking, we've often gotten hung up on this idea that the bank has a service to the partner banking. We finally come to fruition what used to be the promised land, this idea of embedded banking. What that means, I always go back to the Bill Gates quote that talked about, it's like, people don't need banks, they need banking services. For me, embedded banking has always been part of that promised land. So joining me today, very excited to have Jason Henrichs from First Electronic Bank, Mike Jorgensen from US Bank, and Louis Mrachek from Merrick Bank. So, gentlemen, let's start with, when you think of embedded, let's bring this to life for people listening for the first time. Each of you give me a use case of embedded banking. And it can be payments, it can be lending, it can be something else. But when you want to explain to people over Thanksgiving dinner what embedded banking is and what you guys work in, what's the example you would give? Liz, why don't we start with you?
Yeah, sure. I think that the example that obviously pops into my mind is lending. But there are many others, right? With lending, what embedded banking, bank sponsorship, banking as a service allows folks to do is to, rather than having to go get licensed in a bunch of different jurisdictions to lend with a bunch of different rules, use one set of rules across the country. That it's borrowing from the bank or administering on the bank's behalf. It can then go reach everybody with the same look and feel, the same set of terms and conditions, and the same experience.
You know, it's interesting. The one that I like to talk about a lot is an insurance company, especially for property casualty. If you think about the process that a lot of insurance companies go through today with people like me that buy insurance from them, a lot of times when I have a claim or like I had a pipe break in my house, trying to get that payment is awful. They have an app and then there's a different separated, thing that you need to go through with your bank in order to get paid. How nice would it be if the insurance companies had a central place where all of payments could reside and then make sure that they could make those payments out to consumers in the format that a consumer wants to be paid, right? That's all an embedded experience that insurance companies don't create themselves, but that fintech providers in the middle do. And then they make that experience so much better than anybody could imagine.
We often miss the insurance one. I'm glad you brought that up. I mentored a startup in the UK that's grown quite successfully under Barclays that's embedded insurance for your car, that you literally turn the insurance on and off when you're driving, right? So when it's sitting in your driveway, it's a different kind of insurance, like the tree falling on it, versus it's a different insurance if it's your 16-year-old getting in the car for the first time, right? But the insurance itself is embedded in the car as opposed to a policy that, that sits on your computer. Jason, what example would you give that brings it to life?
Yeah, so I usually go to the other extreme, like the Klarna or the Affirm at checkout, just making it as seamless as possible.
The do you want to finance button?
Yeah, like right there, you've got the shop pay checkout. All right, I can just click that. I don't have to put any information in because I've already used it once, and now I can turn that into a pay over for right at checkout and be done.
So, Jason and Louis, when we talk about embedded banking, right? Wide swath, but it really means different models. You both do embedded lending primarily. What does that look like? Jason, let's start with you. When you do embedded, what does that look like to your partners?
I mean, it runs the spectrum, right? Everything from co-branded credit cards with a retailer brand out there that's facing it, to, buy now, pay later. We are the credit issuing bank within Cash App for cash. So, really enabling these brands to provide lending services at all sorts of different points through a customer journey, and make it nice and seamless so they don't necessarily know that First Electronic is behind the scenes. They're working with Cash App and they got $100 in their bank account, and they have no idea who's behind them.
What kind of embedded lending do you get?
It's similar in concept. I almost think of it as embedded banking. In some ways, we're just another service provider to these businesses, right? They've got a loan management system. Is that embedded banking? Well, it doesn't necessarily need to be a bank that administers that. They've got their own CRM that they might have outsourced to somebody else. What we offer them is, look, you can put a lending product inside of whatever you're doing, right? And you can do it in a way that's consistent. And so I almost think of it as it's an important part of what they want to offer to their customers. It just happens to be banks that offer.
Mike, U.S. Bank plays in a lot of different spaces related to embedded banking and your traditional partner banking. What are the breadths of things that you see within U.S. Bank? What do you all support?
Our goal has been to look at the ecosystem and say, where can we add value? We're a bank. We do money movement. We do, financing. We do a lot of things that fintechs don't and can't do, right? We don't want to look at fintechs as being, enemies. We want to look at them as being partners. So we have a couple different models. We have a partner network where fintechs can come in. They can take our APIs for payments and reporting. They put it right into their platform. A great example is Kyriba. Think about all the users that use Kyriba to manage their companies. All of our payments are natively available in the application because of the way that we embed our payments through them. Same thing we do with an FBO process. We can do money movement on behalf of through many different channels for a lot of different fintechs to be able to support those needs as well.
Now, there's a certain irony here, right? As software continues to eat the world, as AI is eating software, and agentic will eventually become maybe the ultimate version of embedded banking, right? We're not even you're doing it ourselves. Software is doing it with software on our behalf. There's a bit of an irony to me of banks powering the very software providers that are eating banking, right? Does that cause a conflict within your organizations?
Yeah, it's a good question. I look at businesses we partner with. I look at fintechs out there, and there's a lot of things that I wish we could do, but that I know that we just can't do for one reason or another. Are we going to have, as a bank, already be able to hire a world-class development team? It's kind of hard.
Yeah.
Right? We don't have a great value proposition to great engineers and great developers. Are we able to move as fast? No, certainly not. And that's where some of the tension in the partnership comes in. We've got to find a rate of change that's acceptable to both. But I think it's easy to look at it and create the tension on both sides. But I think the right way to think about it is it's a symbiotic relationship. They can do things we can't. We can do things they can't. We can do more together than we can.
I agree. I actually think the symbiotic nature of the relationship is really powerful as long as you understand what the roles are. An AI agent is never going to have money transmitter licenses. It's never going to have a bank charter. You need to be able to have a trusted partner that sits behind the scenes and does everything from KYC, risk management, compliance, money movement, that makes all of the things happen. If you think about your favorite rideshare app, when was the last time you opened your rideshare app and you went, oh my gosh, I wonder who is the bank behind this? You don't worry about it. You know that there's a trusted bank behind that, making that run, right?
Yeah, and I think that's where we come in and being collaborative with our partners and going, all right, we understand where you're trying to get with this. Let's figure out the compliant way to do it, given the regulatory framework they're building.
Let's pull on the trust thread for a second, because that's a really interesting one. That is the trust knowing there's a bank behind it and the bank is regulated, or do I trust Uber and Lyft knowing there? Because oftentimes in embedded, I think there's a difference in model that maybe we should discuss here is there are brands I trust that such as, I think of, an outdoor brand that used to own a bank because its rewards program was so large, right? And Cabela's and the Bass Pro Shop, and what they did where the trust was in the brand of the purchase, that having an embedded banking and financing there, you trusted the brand and not necessarily the bank. But in there are other cases, right, where it's maybe a startup, I trust that the bank is going to make sure I'm safe. How do we think about trust when you're talking really about dual ownership of sorts? Sometimes it's a silent ownership of the customer. Other times it's an explicit ownership of the customer.
We've made a distinct decision on that front to make sure that we are a trusted partner that is equal with the fintech we work with. We don't use a reliance model. Reliance is a big thing in the industry today. You rely on somebody else's KYC processes and you audit them. We don't do that. We believe we should be firsthand with the partner. And when you do that, you have a dual approach that regulators, that customers love. Then you know that you've got a stable transaction process with the KYC being done like that. And then same thing happens with transaction monitoring. We do it along with our partners. That overhead is an investment that's so important to us because of being that trusted partner.
And I think with trust, it depends on which part of the banking spectrum are you in, right? Deposits, a consumer's really going to want to know, all right, who's the bank? they're looking for the FDIC logo. Whereas with credit, it's like, okay, I know the brand, I'm already getting it with them. I don't necessarily care who the bank is that's issuing my credit card because I shop at, Cabela's in your example, and that's who I have that banking relationship with, not knowing who's the actual issuing bank.
Yeah, I mean, I think in that case, with the credit card, who are you trusting? Are you trusting? At the end of the day, it's probably Visa, MasterCard. I don't know.
Yeah. In terms of who the bug is, that's brand you're
and they'll only issue a BIN to a bank, right? And so there is, but it is. I mean, I think we all wish maybe we all should do a little bit more due diligence on who our financial partners are. I don't know. But at the end of the day, like I don't know if reliance is the right for us. Trust but verify when it comes to partners.
Yes.
I think when it comes to trust with the consumer, we have our own consumer brand too, like you guys do, right? Trust with the consumer for us is non-negotiable.
Well, and it feels like ambiguity is where we get in trouble here, right? When it's ambiguous who is either making the decision or who is in charge on these things. And that clarity, tends to swing on who has power in the relationship, right? With like in the boom days when it was all about the startups having the power, right? It kind of swung one way. Have we reached a level of, stasis on this now where like, are we in a positive spot in terms of the balance of power in clarifying roles? I'm curious of their best practices around clarification of who's responsible.
So I think we've seen the shift, obviously, with all the consent orders, everything else over the past couple of years. The banks are in the driver's seat on a lot of that. Ultimately, it's the bank that's going to get in trouble if something gets messed up. So they're driving the conversation. And I think that's better for the consumer because, hey, banks' entire job is to mitigate risk. So we have to be looking out for the consumer because otherwise the regulators are coming down on us.
Yeah, and as much as I wish this weren't true, when you're negotiating with a partner, yes, some of it's the commercial terms, but some of it is oversight, right? It's not always what you wish it was. I don't think, but it is. Again, from our point of view, a lot of it's non-negotiable, right? I do worry about in the industry, like, is it a race to the bottom too? If this is a competitive process. Every fintech that gets a bank partner wants to have the right bank partner for them. And what does that mean to them? It could mean different things. For some, it could mean purely price. For some, it could mean, hey, I want a real partner that's going to be in this with me for the long haul. I want somebody who I can exchange ideas with and help me build a better product. Or I want somebody that's going to leave me alone. Right. And so we need to be selective about who our partners are on the outside too.
Absolutely. Especially if you look at even at the bank level, there have been some bank failures and some folks that have really created disruption. And it's because their risk processes and some of the things they were doing weren't quite where they should have been. The word I would append to the trust word we were talking about earlier is invisible. If you have an invisible layer of trust and power that a bank can bring to the table, there is going to be some level of overhead and importance that we bring with that partner so that the consumer doesn't feel it. And they know that there's a stable partner and trust factor there. That's a super important part of a bank being able to provide a stability and an infrastructure. People don't have to see it, but they know that thing is going to be there to be constant.
And the rubber seems to meet the road when we get to the product and experience design. And it's the place where I often see in some cases, especially when it's a fintech as opposed to a brand that's looking to embed, they want to own the experience and make those choices, right? Because oftentimes it's what feels like friction is actually the safeguards, the KYC, the KYB, the underwriting aspect, attached to these things. And there's that tension between the two. Do you feel like the space is matured, that has gone away? Are we finally done with my pet peeve of we're going to follow the Uber model and move fast and break things? And you want to say, that doesn't work here. Are we past that?
I hope so, but
I was going to say the exact same thing.
I mean, there's still some of that where they want to do those things, and then it's our job as the bank to be like, okay, I understand what you're trying to accomplish, but let me help you craft that within this universe y'all have to live it then. And so those conversations, I think that's where the bank partnership comes down. Is we're actually providing that guidance and helping them get close to what they want. Maybe it's not 100% of what they want, but they're doing it in a compliant way.
Yeah, it's one of those things that I love the fact that this is our bank culture, at least. We love that there's ecosystems that fintechs cater to. They take an experience that we can't provide and they create a great experience for those consumers, right? And we want to be a part of that. I can't say that all of the major banks or even some of the super regionals and lower banks have that same attitude. I still think there's friction as they look at them potentially being enemies and people that would take away, a competitive advantage they might want to give the marketplace.
Well, this is one spot, embedded in particular, where I find it truly is partnership versus vendor. There are some, when you look at like the partner banking model, it isn't really partner. It is, they view the bank as a vendor. And that vendor is the access to the regulatory framework, whether it's being able to lend in all states without having to get a license or money transmission, access to, that master account. But this, because it is, and embedded to me, it is, we both have the trust of the customer. It has to be a partnership. How have you found your ability, like, how do you build that trust with the partner? Because you have that shared responsibility where it's not like they can point to the bank and say it's the bank's fault. You can't point to the partner and say it's their fault, right? Like, you are mutually culpable.
You have to be invested together. And the one example I've got, we have a customer, Rain. They do earned wage access. They provide that to the marketplace. And that's a really important social responsibility thing that they solve for, right? You're giving people that need money access to their money when they need it and how they need it. And when we went and approached them, we said, hey, we're not looking just to be a vendor. We're looking to be a partner. How do we help you take that social mission forward so that our payment processes and our stability can help you make life better? That was what really did it for us and for them, is they said, okay, that's what we're looking for too. If you don't find a relationship like that and you just have a vendor relationship, it's really hard to be successful.
Is that how you avoid the commoditization, right? As more banks have gotten in, as more infrastructure is available digitally to connect these things, it feels like the one thing that can't be commoditized is actually the shared value system and that trust. Is that fair attribution?
Yeah, I'd say absolutely. I mean, that was part of what attracted me to coming to First Electronic from being in the startup world, was having worked with a bunch of other sponsor banks. And the experience we had was, oh, okay, they get what we're trying to do. Let us help you build it. Let us help you kind of refine and craft it. So there was an actual partnership as opposed to, oh, it's just the vendor we use to, get access to banking services.
Yeah, I mean, I think the other way to separate yourselves from commoditization is actually differentiate your product somehow, right? Can you offer something else? If I'm offering, a bank sponsorship program, can I offer a warehouse loan or balance sheet support? Can I offer other capital support for the business? Can I help with servicing? And so offer, if you're a fintech out there who's just, I got to get a charter. I don't know if any of us would look at that as like, that's the kind of partner we want. We want to be a thought partner. We want to be, we want them to ask us about underwriting.
So, Mike, what other vectors does U.S. Bank choose to differentiate on? I think both Jason and Louis brought up great examples of differentiation. What else do you guys choose?
So, the hierarchy of embedded, you have embedded banking and finance, which is like the bigger umbrella, very broad, lots of things you can offer, right?
Yeah.
At U.S. Bank, we decided our core competency was really embedded payments. And how do we make sure that we become an engine to all of these fintechs on two different sides? Number one, how do we look at them and invest in them and use them potentially in the bank? And also, how do we help them become successful and move money as well? So we try to hit that on all sides. We have a merchant business, Elevon, that does this very openly and publicly. They work with a lot of different payment facilitators and others that drive some great benefits in the marketplace. We also do that with a treasury and a payment platform that we own and operate. And then we actually have a fintech partnership program. We've decided it's an investment. Instead of becoming a commodity, we want to become a growth partner. And that's what we're doing many ways in an invisible way.
So as we look forward, bring this to close, and you project, we're at an interesting time with, AI is causing change at a pace that's unprecedented. We're looking at embedded, right? Because vertical SaaS and micro applications with, Angela Strange, for instance, saying everything is fintech. And it's like, well, no, the reality is everything has financial services really attached to it. Even if you're a nonprofit, there's exchange of money and value in almost everything. When you project forward, what do you think the next big horizon is that you look at and say, over the next year to 2 years, what do you think is going to change the most that will be surprising? when we look back in retrospect?
Do I have to go first?
Have to, yes.
You volunteered yourself.
Yeah.
I mean, this is probably not a fundamental shift. I'll start here, though. You mentioned AI, right? One of the, I think, the big points of friction between bank originating sponsor bank partners and in the fintechs is a lot of it's audit rights and exam rights. AI solves all of that, right? Let's deploy an AI agent to do transaction testing. It's going to do it real time. It's going to summarize it all. I was just talking to Spring Labs about that. So I think the ability to deploy technology to reduce what feels like a burden to our partners, it makes the relationship just removes friction out of that one point of contention in the relationship. I think probably strengthens the relationship potentially meaningfully.
You know, I've got 3 kids in their 20s. And if you ask them where they would want to go for any type of service, banking, anything else, they don't go to storefronts, right? They go and they use something above the glass, whether that's going to be a phone, a tablet, something like a laptop. That's how they interact with a lot of financial transactions today. Their expectation is not that they're going to go and have experiences necessarily in a brick and mortar, a branch, or anything else from a banking perspective. They expect that there's going to be a simple 24/7, 365-day a year availability to loans, to money, to payments, to whatever it is. Embedded is going to transform into that. We're right now doing that, and it's really cool to watch over the weekends on holidays when people are still doing financial transactions you would not normally do, right? I've got title companies where we're doing closings and money is moving on the Saturday at 3 o'clock in the afternoon. And that's something that's remarkable and will continue to happen in an embedded world.
I mean, U.S. Bank's application for instant payments around cars was one of my first really good use cases.
Driveway.com, yes.
Right, like that is a big problem when you're standing on the lot for an inordinate amount of time because you can't drive off until the payment settles, right? For good reason, but it is a great use case of embedded and title, tying the transaction to the value transfer. Jason, how about for you?
So I think, we do a bunch of co-branded cards, and I look at that as a spot where everything is under embedded because, I'll use the Delta Amex card for an example. I have this Delta Amex card, but why am I managing it the Amex app and not the Delta? Because most people go, yeah, I've got the Delta credit card. And so I think you're going to start to see the move of all of these co-branded things or white label payment solutions where now you're managing it within the app of the brand that you're going out to as opposed to the bank.
I love that example. Now I'm angry that I have to go to my Amex app to manage my Amex versus I leave in my Delta app.
You can do it in the U.S. Bank app. There you go.
There we go. Well, thank you all for joining me and sharing your thoughts on embedded finance in the future.
Thanks for having us.
That's it for another week of the world's #1 fintech podcast and radio show, Breaking Banks. This episode was produced by our US-based production team, including producer Elizabeth Severance, audio engineer Kevin Hersham. If you like this episode, don't forget to tweet it out or post it on your favorite social media, or leave us a 5-star review on iTunes, Google Podcasts, Facebook, or wherever it is that you listen to our show. Those actions help other people find our podcast, and in return, that helps us build an audience that can be supported by sponsorship so we can continue to provide you with our award-winning content every week. Thanks again for joining us. We'll see you on Breaking Banks next week.